Okay, well, dear listeners, viewers, one and all, ladies and gentlemen, thank you for joining us. Nobody panic. We haven't changed the host of the show. Shout out to Jake Evans, who appeared in our intro video this afternoon for no real reason. Just a bit of fun. We got the old video back on. Nico, we're back after a brief hiatus here on Weekly News. Last week, we were very sad to miss all of our regular viewers and regular listeners. We're sorry we missed last week. You may have heard there was a large industry event taking place in the jewel of the Mediterranean, of course, on the beautiful island of Malta, where Nico and I were both in attendance. And we just had a slightly hectic week, didn't we, Nico? And we couldn't make it for our usual spot. So apologies to everybody who wanted to tune in last week and couldn't, but fear not, because we had a lot of M&A action, some huge moves in the market last week, and that has continued right into this week, and we're going to take you through all of the major stories, so nobody's going to miss out. But I'm pleased, as usual, to be joined by my fabulous co-host, the one and only, the most magnificent man in iGaming, Mr. Nico Jansen. How are you?
So, first of all, thank you for this once again pretty awesome intro, right? So usually, like I was, not that bad at sports. If you're hitting a goal like this, it's okay, can't get better. Go take a shower and then bye-bye. So once again, shout out to you and shout out once again to our listeners, which actually came up to me during Sigma, like Tino as well. And he was like, okay, are you that Nico from the Next.io podcast, the weekly news? Yes, I am. And we just had a decent chat. So once again, also shout out to you, Connor, for emphasizing our listeners to actually step up to us, to talk to us. And it was a decent conversation. Once again, shout out to Tino here from this end as well. And it didn't hurt, didn't it? So it was fun. Sigma was fun. Quite demanding, as I needed to fly out on Wednesday already, but I needed to take care of things in Germany. And once again, because that was quite hilarious and fun, I just posted something on LinkedIn, like always, make sure that you are surrounded by people who actually stand up for you in rooms you are not in. Then out of a sudden, we couldn't make the weekly news, and I received messages like, okay, Nico, is everything still in order? Are you okay? Is Next.io okay? Because, they were assuming like my post was linked to the both of us not having the weekly news. No, it wasn't. We just have not been able to actually, make the time to come up with the weekly news. But besides this, nothing happened. But once again, shout out to all the lovely people sending me messages via WhatsApp and LinkedIn and emails to just ask me if I'm okay. Yes, we are okay. We are as eager as always. And this week, once again, we will just provide you with the latest and greatest of our awesome industry. So, Connor, how have you been the last 2 weeks?
I've been very well, Nico. Thank you. Yeah, I had a good week in Malta. It was nice to see a few familiar faces, meet some new people, as you say, have some good conversations. In fact, I believe you might have picked up on one or two little mumblings and murmurings and whispers in the market and some possible upcoming action that we're going to dive into a little bit later. Funnily enough, as a journalist, nobody wants to tell me anything. So luckily we have you, Nico, our man in the know, who can go around and have these interesting conversations. So stay tuned for a little bit of Sigma gossip and some possible future action that we might see. So we've got a couple of rumors flying around, but I'll try not to say too much just yet. Nico, like I said, we've got a huge amount to get through today because we are playing catch up this week. So I think without further ado, we should go on to our regular weekly feature, which is, of course, the 10 biggest headlines of the week in just 5 quick minutes. It is the world famous and world renowned 10 in 5. Nico, are you ready?
Wait. Hold your horses.
I'm waiting.
First of all, shout out to Bogdan, right? He just dropped the message. Yeah, long time no see.
It has been a long time.
We've been worried about you, mate. So, Bogdan, hopefully each and everything is going awesome with you being the CEO or stepping up into a CEO position. And it's good seeing a comment of yours back in chat. So please, if you wanna, so you're always good to read and you're always very sharp with your comments. So welcome back again. And we couldn't be more proud of seeing a comment of yours. But as you already did the introduction, of course, I'll be back like the Terminator style with the 10 and 5. So let me kick it off with LiveScore Group is restructuring and the impact, and this will impact over 100 staff roles. Sports media specialist LiveScore Group is set to eliminate more than 100 roles across multiple business locations, including their home turf, London. The decision comes as part of an internal restructuring aimed at streamlining operations and securing long-term sustainable growth for the organization. Employees impacted by the change have been informed and are now undergoing a confidential consultation process. Stake is up to pay 7 million ADM fee and refresh Ideal Bet Italia. As confirmed, Stake has pledged to pay ADM, which is the Italy's customs and monopolies agency, its 7 million licensing and concessions fee, lasting an operating period of 9 years, as it has chosen to operate Ideal Bet as its principal brand in Italy. Moving forward, Ideal Bet sportsbook and casino offerings will be elevated by Stake's proprietary platform and a new portfolio of exclusive Stake game titles. Then, Codier Online appeals Nasdaq's delisting notice over reporting rule compliance. Codier Online, the digital betting arm of Spanish gaming company Codier, has received a delisting notice from the Nasdaq stock market due to non-compliance with the exchange public reporting rule listing 5250 C1. The company has filed an appeal and is working to address the issue, which automatically stays the delisting and suspension of trading for 15 days. Trading will continue as usual. During this period. While delistings often occur due to shares trading at low levels, that's not Codier's Online case, whose stock has seen strong performance, up 160% year to date and closing at 758. So we will just get back to you with even more information as soon as there are new information to be distributed. Then report as Washington, D.C. sports betting contract is under investigation. The D.C. sports betting saga continues as the District Attorney General's office is reportedly investigating the D.C. lottery contract with Intralot. In August, the initial DC sports betting partner, Intralot, could be under investigation based on DC Superior Court filings for false claim violations. As of now, we don't yet have any further information, but for sure it will be interesting to keep an eye on this one as well. So heading over to the UAE, as the regulator will take its time with UAE resort licensing. The General Commercial Gaming Regulatory Authority is focused on the operators we have already licensed. stated by the chairman, Jim Murrin, said in a response to speculation about further integrated resorts licenses in the UAE. And there are rumors going around like MGA will seek for a license in the UAE as well. So as said, also this one is, as of now, is a rumor. As soon as there's anything more to say, be assured we will release news. So illegal gambling ads are down in Germany thanks to the Google update on September 25th. Google introduced a change to its advertising policies regarding the gambling and other games. This has had a positive outcome in Germany, as now only those gambling providers with a license from the German regulator, GGL, can advertise their products on Google locally. And the official statement of Roland Benter, board member of the GGL, said, the change advertising policy is currently showing a significant effect from our point of view. Then Betfred is sued for alleged unpaid affiliate services in Nevada. According to the complaint filed in Clark County District Court, which is in Nevada, We Win Games, a big affiliate, claimed it entered into an agreement with Betfred in October 2022 to acquire customers for the sports betting company's mobile gaming products in Arizona and Colorado. The filing said the contract initially stipulated a $300 commission for each new customer who opened and deposited at least $10 in an account. The company submitted invoices totaling $366,000 during this period, and the first $175,000 of which were initially paid by Betfred. Guess what? This happens quite often, but it's the first time, from my understanding, that an affiliate actually takes this one to court. And then High Court dismisses a 1.5 million player losses case against Betfair. A UK High Court judge has rejected a case brought by a player seeking to recover £1.5 million in losses made on the Betfair exchange between 2009 and 2019, as Betfair did not owe him a duty of care. So the plaintiff, his name is Gibson. Gibson's case argued the operator, including his VIP manager, had encouraged him to dodge responsible gambling checks. But Flutter refuted this claim and provided evidence of Gibson assuring the operator he could afford his gambling activities and even suggesting he was particularly wealthy. Okay, 2 more to go, as Vickhaus is fined 2.9 million and handed a 3-month marketing ban. Finnish state-owned gambling operator Vickhaus has received a 2.9 million fine and a 3-month marketing ban from the Finnish National Police Board, shortly NPB, and the sanctions stem from a July incident when Vickhaus advert aired during a program also watched by underage viewers. And last but not least, 888, Betway, and Bet365 are among interested operators as New Zealand confirms 15 online casino licenses being available. As New Zealand prepares to launch its regulated online casino market in 2026, Internal Affairs Minister Brooke van Velden yesterday revealed a total of 15 licenses will be available to online operators. So New Zealand will be an upcoming market as well. And as we all know, Australia, which is pretty close to New Zealand, is one of the most attractive online gaming markets as well. So fingers crossed this will apply to New Zealand as well. And this has been my 10 and 5.
Nice job, Nico. You always keep the headlines interesting and keep them dynamic and fun to listen to. Now, We're going to move on because, as we have already teased, we have a huge amount of M&A news to update you on. We've got updates, Nico, from deals that are worth, wait for it, collectively, $12 billion and more. That's billion with a B. So if anyone says that there's been no movement in the market this week, well, you can send them our way because we'll tell them they are wrong. So the first story in all of this is about Bally's. Now, you understand about Bally's and its merger, which is coming up with a company called the Queen Casino and Entertainment. That is a portfolio company which is majority owned by Standard General. Standard General being Bally's largest shareholder as well. So it's got these two companies and it's going to merge them together. That deal, Nico, was approved this week by Bally's shareholders. If I can take you back in time, you remember in July, Bally's accepted the acquisition offer from Standard General, which was worth $18.25 per share, which equates to $4.6 billion. So huge, huge deal here. Just to remind you, that price represented a 71% premium over Bally's 30-day average share price from the 8th of March, which was their last trading day prior to a previous offer from Standard General of $15 a share. That initial offer was rejected. $15, not enough. $18.25. Okay, we've got it over the line. So there was a special meeting on Tuesday among Bally's shareholders where they strongly supported the merger agreement and secured the required majority vote to move the deal forward. Shares held already by Standard General and Sinclair Broadcast Group and certain company executives were excluded from that vote, but of all the remaining shareholders, they managed to secure the majority vote in favour of the deal. Now, we've got a couple of different deals coming up and they're all going to work in slightly different ways. So just for the sake of clarity on this one, Nico, Bally's will remain a publicly traded company after the merger, which is expected to complete in the first half of 2025. So sometime in the next 6 or 7 months. Just looking back quickly at the rationale behind this deal. So Standard General managing partner Sue Kim said in July that the addition of the complementary Queen Casino and Entertainment assets builds upon Bally's, quote, attractive growth profile. So just for the sake of clarity, Queen Casino and Entertainment currently operates 4 casinos in Illinois, Iowa, and I think there are 2 in Louisiana. So I think 1 in Illinois, 1 in Iowa, and 2 in Louisiana. I think that's right. Anyway, 3 states, 4 casinos. And after the merger, the combined company of Bally's and Queen Casino and Entertainment will manage 19 separate gaming facilities across 11 US states, as well as offering a diverse range of online gaming and sports betting products. So in the one sense, Bally's is diversifying its portfolio, particularly its land-based portfolio. It's now going to be active in 11 states, 19 properties. In the meantime, Nico, you remember from last week or a couple of weeks ago, oh, not last week, a couple of weeks ago, because we weren't here last week, Bally's agreed to a management buyout of its Asian interactive business. So what we don't know is whether that was a prerequisite from Standard General for the Queen Casino and Entertainment merger to go ahead. That's possible. I think there's possibly some pre-regulated markets that the interactive division was working in, and maybe that doesn't line up with suitability for land-based casino licensing and all this. So it's a bit of de-risking, I guess, Nico. And we kind of discussed this a couple of weeks ago. It's also a resource question and how many diverse markets the company actually feels it can operate in. So Robeson Reeves, the CEO of Bally, said that the separation enables the Asian business to succeed in pre-regulated markets while allowing Bally's to monetize high-margin license revenue streams. So There you go, Nico. We've already discussed this deal in the past. Of course, there's lots more detail available at next.io. You can scan the QR code in the corner for the full story. But pretty simple update. The update is the deal's going ahead. The shareholders are up for it. Obviously, they're pretty happy with the price they've been offered, 4.6 billion. It's not chump change, Nico. What do you think?
Yeah, so it's just a confirmation of the deal, right? And we just see how what kind of big deals we are actually dealing with, right? And once again, shout out to you for linking the management buyout news we covered 2 weeks ago, also to this deal. So, as you already mentioned, you're a journalist. That's why you can connect the bits and pieces. So, shout out to you once again. And one comment we want to, pick up on as Bogdan, touching down on the 10 and 5 comments, the more governing bodies will impose fines to the operators, the more clients who would like to be smart will appear to the surface. It's not something which is under the radar. It actually became a big sport. So that's also the underlying reason why we have Bill 55 in Malta, as it became a big sport to actually sue operators for, offering unlicensed business in licensed markets. So this happens in the Netherlands. It became a sport in the UK as well. It is a sport in Germany. And that's why the highest court in Germany actually passed over this decision to the European Court of Justice. So we are just waiting how the European Court of Justice will actually decide on this matter. And then things might go south for a lot of operators in Europe. So we don't know yet, but we actually, value decisions like the one which has been filed in the UK as well. But as said, we will just wait until the European Court of Justice will actually decide on this matter.
Yeah, it's going to be a landmark decision, and it will have implications right across the rest of the EU, Nico. So definitely one we're watching. We had some fantastic analysis on that question a couple of months ago with Dr. Jörg Hoffman. And if you want to find that episode, go to YouTube and search Weekly News Jörg Hoffman, and you will find the best analysis on that question. It was a super interesting conversation not long ago. But there we go. That's Bally's. Now we've got to think about our next deal. That's $4.5 billion dealt with, Nico. We can move on. How about dealing with another $6 billion right now?
Yeah, it's crazy what kind of numbers we're discussing here. As Everi shareholders approve a 6.3 billion US dollars Apollo taking private. So quite interesting as well. So Everi Holdings shareholders voted to approve private equity firm Apollo Global Management's 6.3 billion take private deal last Friday. Investors in the land-based and online gaming supplier voted in support of the proposal, which would see both Everi and IGT's online division acquired in a multi-billion-dollar transaction. Just remember that we already touched down on that topic, and it has just been handed over to the shareholders to decide on this one. And as stated, they obviously decided, according to the company, 99.88% of shareholders voted in support of the deal, representing 71.48% of Everi's outstanding share capital. As outlined in July, the agreement will see each Everi shareholder receive $14.25 per share, representing a 56% premium on the company's 25th July closing price. Everi chairman Michael Rumbles said, "We are pleased that our stockholders supported our transaction with the Apollo funds. And adding, we now shift our focus to the important next steps toward completing the transaction and maximizing value for every stockholders. Everi said the deal is currently expected to close in Q3 2025, assuming the timely satisfaction of necessary closing condition. So Everi chief executive Randy Taylor said that when the deal was first announced, official statement, we believe this transaction maintains the integrity and strong strategic rationale of our original agreement with IGT, but now also provides significant and certain value to our stockholders as we move forward with the Apollo funds as our partner. By joining forces with IGT Gaming, we expect to continue to lead, innovate, and provide unparalleled value to our customers as a stronger player in the global gaming, fintech, and digital industry. So IGT systems were breached in a cyber attack just last week, in the latest such incidents for the industry. And then also in an SEC filing, which is the supervisory board of all stock listed companies in the US, the lottery and gaming supplier said it became aware of an unauthorized third party had gained access to some areas of its systems on November 17th. The cybersecurity incident, IGT said, led to disruptions in certain internal technology systems and applications. The hack is just the latest in a series of security breaches in the gambling industry following a huge breach last year at MGM Resorts that made international headlines and resulted in a 100 million EBITDA hit. The provider said promptly after detecting the issue, the company activated its cybersecurity incident response plan and launched an investigation with the support of its external advisors to assess and remediate the unauthorized activity. And the company has also proactively taken certain systems offline to help to protect them. So this is just some of the side information of what actually happened to IBT systems as well. What do you make out of the story, Connor?
Yeah, well, let it never be said, Nico, that we are not up to the minute here on Weekly News. We haven't even got a QR code for this story because it's just been published. But if you're on LinkedIn, you can take a look at the comment from Next.io News and you will find the link. Alternatively, just go to the Next.io homepage and you will find this breaking news about IGT and this breach that happened last week. Of course, we saw with MGM and Caesars, was it Caesars, I believe, when their land-based systems were hacked. We saw the chaos that this can cause for a gambling business, and we see, I would say, Nico, a kind of growing appetite among these hackers and cyber criminals to actually target the gambling industry specifically. So the one thing you got to remember, if you're running a gambling operation, you have to make sure that cybersecurity is watertight because there's always going to be bad actors trying to get in. That wasn't very good timing for IGT, who are working towards this merger with Everi and Apollo Global. But hopefully, it sounds like it didn't have a huge impact on operations. They've closed down some areas in a proactive way to prevent anything too serious from happening. So as we find out more, Nico, as always, we'll bring it straight to you and let you know the latest on this one. I want to talk to you a little bit about this take private deal, though, which is kind of, it's something which maybe we're going to see more of in the coming years, but it hasn't been that common. Let's say over the past 5 years, the kind of trend has been the opposite. And towards public listing, we had the SPAC boom. We've had a handful of IPOs, although that slowed down. do you think there's a kind of good, strong argument for taking such a big business, a $6 billion business, taking that off the public market, Nico, and holding those shares privately, and kind of gaining all the benefits that go along with that? Or do you think that also opens the business up to new kind of risks?
So first of all, if we just take into account for all the stock listed companies, and this is not just related to gaming companies, iGaming companies, this is related to all actually stock listed companies. Just take a look at the stock prices of Nvidia, who was down 3% as they did not match the highest kind of anticipated rumors. We've seen Evolution taking a hit of 25+% as soon as rumors, blackmailings have just been circulated. We've seen Flutter shares going down, etc. So this all can always happen as soon as you're a stock listed company. And if, you know, rumors are hitting the news, sometimes you're just not in control of actually commenting on rumors, then the stock price can take a significant hit. And as soon as you're taking a company private, there will be no stock prices and no stock listings anymore, which will actually, not dry out the waters, but actually, make sure you will just be in more confident and settled water. So this could be seen as a good move also for big stock listed companies, as said, by taking into account how the stock prices of Evolution took a hit of more than 20% the last time rumors had been floating around. So as long as you are actually capable of taking a company private, I am pretty sure your investors, who will still be able to actually gain and get dividends, will be quite happy as long as dividends are being paid out. But thank you once again for linking it with the SPAC, so the SPAC, which is also a way to actually stock list your company. This is just if you're seeking for new and fresh money. So if you're settled and all and you're and you have deep pockets, well funded, then taking companies private is quite a sophisticated move. And if I'm not mistaken, we've seen this with Twitter and X as well, but I'm happy to be corrected on this one as well.
Oh yeah, I actually don't know if it was listed or not. Let's look into it. Someone let us know in the comments. When Elon Musk bought Twitter, was it publicly listed or did he buy it privately? I can't remember, Nico. But there you have it. That's nearly $11 billion worth of deals dealt with in just over 30 minutes. So far, I think we're doing pretty well. And we've got another $500 million to come just after a short break. But before we do, I think we have a very brief video message from one of our partners to share with you all. There you have it. Thank you to Hub88 for sponsoring this episode once again and keeping us coming back every single week so that we can bring you the biggest headlines of our wonderful industry. Now, I'm going to move on, Nico, to another $450 million deal. Yes, it's million this time. Don't panic, not 450 billion. That would be a little excessive. Okay, so we are talking. This is one of the stories we would have discussed last week, but unfortunately we couldn't make it. So I want to bring your attention back to sports and entertainment company Endeavor. We're talking about the owner of the UFC, the WWE, huge portfolio of sports and entertainment companies operating right across the globe. But Endeavor has agreed to sell two of its subsidiaries in the iGaming sports betting, sports betting really, space, which is OpenBet and IMG Arena. Those subsidiaries are going to be sold to a newly formed company called OB Global in a management buyout valued at approximately $450 million. The buyout is backed by Endeavor CEO Ari Emanuel and has participation from OpenBet executives, including CEO Jordan Levin, or Jordan Levine. Excuse me, Jordan. I'm not sure on the pronunciation. Now, let's say Levin. Anyway, no, let's say Levine. Anyway, say la vie. Endeavor described the sale as a necessary step towards completing its own, here we go again, Nico, take private transaction, which is led by private equity firm Silver Lake, and that is expected to close in Q1 2025. So it's going to be a pretty big year for M&A and take private deals and all the rest of it in 2025. So if you remember, I think we have discussed this one before, because in August, Endeavor said it had begun promoting OpenBet and IMG Arena to potential buyers during Q2 this year. So OpenBet CEO Jordan Levin, let's say, he said, this management buyout allows us to continue executing our vision for increased market expansion and product innovation. Our group is extremely confident in OpenBet's future, considering the premium product offering, superior talent, and solid foundation we already have in place following a strong period of business growth. That was a bit of a mouthful. Anyway, what we know about the post-buyout plans, well, we know that the financing for the deal will consist of both cash and debt. And post-acquisition, Levin will retain his leadership role as CEO of OpenBet. Meanwhile, Endeavor said it intends to continue marketing IMG Arena to third-party buyers after the transaction. So we'll see what happens with that. So I think Levin and his kind of management-led buyout is focused primarily on OpenBet itself. So the buyout is projected to close just before Endeavor completes its private equity transformation and should streamline its sports and entertainment focus. It's kind of spinning off that gambling side of things and saying, you know what, you're the management team, you know how to run this gambling operation, you do it. We're going to focus on sports and entertainment, and you guys can take the gambling stuff off our hands. So OpenBet powers operations for more than 200 operators around the globe. It was initially acquired from Light & Wonder in 2022, although I guess Light & Wonder was maybe still called Scientific Games at that time, Nico. So it kind of, as we know today, Light & Wonder very, very focused on casino gaming and iGaming. It kind of got rid of its sports betting side of things. And so OpenBet now is going to be led by its own management. So there you have it. Just a quick update for you there, Nico. But this was a pretty big story last week. Lots of people were talking about it. Yeah, seems like, in contrast to, let's say, a company like ESPN, which is a media-first company, and what all of a sudden decides it wants to get into gambling, Endeavor seems to be going the other way. They say, you take the gambling away from us and we'll focus on the wrestling and the UFC and all the rest of it. So, sensible move, Nico, do you think? Or do you think they're giving up a significant portion of revenue here that they should maybe have kept within the business? What's your take?
So, first of all, you never know. Ex ante, you never know if it's the right decision, yes or no. But ex post, we will find out if it has been the right decision. So, from my point of view, sometimes just getting back to what you focused on once, which made you a big company, ain't that bad. Getting the focus back on some of the verticals which you are able to actually handle way better than steering a big time ship. And as you already mentioned, it was a management buyout, wasn't it? So you just have the team which dealt with the overall vertical already, which made it a strong and long-lasting company is now back in charge. Now the former or the actual management team will be able to focus on different tasks. So I'm pretty sure it was a good and decent move to actually get some more capital to the big one as well.
Yeah, I think sometimes if you have this kind of subsidiary setup where you exist as part of a larger company, maybe sometimes that can be a little restrictive, Nico, and it can kind of hamper your freedom to act a little bit. So OpenBet getting its independence, let's see if it makes it into a more agile operation, maybe allows it to expand a little bit faster. Now, let's move on to another $800 million plus worth of M&A that we've heard about in the last 2 weeks. Nico, I know you've been looking into yet another big acquisition this week. What have you got for us?
Yeah, as the Aristocrat subsidiary, Pixel United has agreed to sell its mobile game development company, Plarium Global, to Modern Times Group, MTG, in a transaction valued up to $820 million. MTG, which is a Stockholm-based gaming and esports company, will pay a fixed price of $620 million with the potential for an additional $200 million based on Plarium's performance through 2028. So this earn-out model is quite common in the private equity and M&A sector, but it's quite interesting that actually one quarter of the overall price is just based on the earn-out model. Sometimes it can be up to 50%, even more if we're speaking of smaller sized transactions. So the decision follows a strategic review by Aristocrat's leisure in May 2024, aimed at owning the company's focus on core areas, including land-based gaming, social casino offerings, and real money gaming. Aristocrat has earmarked proceeds from the transaction for its capital allocation framework, supporting its long-term strategy in the regulated gaming and digital casino spaces. So once again, we just see a company focusing on what made them strong and just selling off assets where they just don't see their expertise anymore. So giving you some background of Plarium, Aristocrat acquired Plarium in October 2017, reaping substantial returns with an internal rate of return in the mid-teens over its 7-year ownership. According to unaudited Q3 2024 results, Plarium contributed $615 million in revenues and $166 million in segmented profit and $110 million in EBITDA. Aristocrat expects the sale to reduce its net profit after tax and amortization by a single-digit percentage, with the transaction set to close in the first half of 2025, pending regulatory approval. Aristocrat has integrated Plarium digital expertise throughout its operations, particularly in mobile content and live operations, which it anticipates will continue strengthening its core offerings after the divestment. And Aristocrat CEO and Managing Director Trevor Croker said, Aristocrat has incorporated a range of Plarium's strategic capabilities and mobile content know-how into its core gaming operations over the past 7 years, benefiting from a digital marketing and UA management capability, enhanced live operations, and scaling and growing our combined social casino business. Our ownership of Plarium has helped to drive Aristocrat's digital transformation, extending our track record of successful acquiring businesses to accelerate our strategy. Alongside the Plarium sale, Aristocrat's review of Big Fish Games, excluding its social casino assets, remains ongoing. Aristocrats has disclosed a goodwill impairment charge of approximately 110 million in relation to Big Fish Games. These assets outside the high-performing social casinos segment are under review for potential sale as well, as the company seeks to maximize shareholders' value across its remaining portfolio. So also within this big deal, we see a focus on core business as well.
There you go. There you have it, Nico. This is a super interesting deal. I like the commentary from Trevor Croker there. One of the interesting things about this, so they've held the business for 7 years and they're selling it for 620 million plus the earnout of up to an additional 200, so up to 820 million. But if you look back at the original acquisition, Aristocrat acquired Plarium for $500 million in 2017. So 620, let's say they've increased the value by like 25% in 7 years, or even if you get the full earnout and so it pays 820 million, then that means they've increased the value by something like 60% in 7 years. It's not bad, but it's not the kind of figures we've seen recently. If you look at Playtech's recent thing that they sold off, I can't even remember the name of it, but they'd like tripled the value in 5 or 6 years from 700 million to 2 billion or something like this. And that's one way, obviously, of generating huge returns from these acquisitions. In this case, Nico, yes, they're making a decent return, but they haven't tripled, quadrupled the value of the business in that time. But I like what Trevor Croker said about incorporating Plarium's strategic capabilities and mobile content know-how into its core operations. So he's saying, we bought the fruit, we squeezed the juice, we've got everything we need from it, and now we're moving on. We're giving it away for not that much more than what we paid for it. Of course, if you think back to 2017, Nico, if you divide those numbers by 1 million, I think we all know $500 in 2017 probably doesn't buy you any less than what $820 buys you today, because the price of everything's gone up so much. So it's not like a huge profit on the deal itself, but it is still a profit. And the real profit, I think, for Aristocrat is incorporating that know-how and technology into the rest of its business. Do you think that's fair enough, or am I talking rubbish as usual?
No. First of all, you're never talking rubbish. Take that comment to the bank. And the deal you've been looking for was the 2.3 billion sale of Snaitech from Playtech to Flutter. And guess what? One of the entities has not been part of that deal. It's the Happy Bet owner, a Germany-facing company, and Snaitech is an Italy-facing company. So there are big numbers flying around in Italy. We covered this one in the 10 and 5 as well. But as you already mentioned, they significantly increased the value when buying it and selling it at the assets off again, at least. And this is the important thing. Aristocrats, they didn't lose money, even with inflation, etc. So they kept the money. And we don't know what kind of assets and knowledge they took out of the deal as well when they acquired it in 2017. They are way too smart to actually not get hold of the assets they had been specifically eyeing on. So I'm pretty sure they made a good deal. But as that time will tell how this one turns out as well. Maybe they will reuse the funds and the money to actually apply for a gaming license in the UAE. Maybe they will come up with a resort in New York as well. Or maybe they will just establish a resort in the city of Chicago. We never know, but one thing is for sure, it will get boring or become boring in our awesome industry. And that's why you're listening to us, as we just put content to the rumors flying around. And as soon as you can read it here at Next.io, you know that this is the truth.
That's right, Nico. I couldn't have said it better myself. I just want to point out we've kind of discussed what the significance of this deal is for Aristocrat. I want to just take a look quickly at Modern Times Group, the buyer for Plarium. This is a Swedish listed company, which is a kind of entertainment and gaming company. It has several subsidiaries in the gaming and entertainment spaces. But what's interesting, Nico, the Modern Times Group market cap is around about 11 billion Swedish krona. That's about 1 billion US dollars. So if this deal's worth 820 million, they're basically nearly doubling the market cap of their company with this one deal. So they're definitely not a company to be ignored in the gaming space in the next few years. And we're going to keep an eye on Modern Times Group, like I say, doubling in size through this, nearly a merger of equals in terms of value. Although, as Logan Rice says, in Succession, there's no such thing as a merger of equals. Someone's always coming out on top. But there you have it. That's Modern Times Group and Plarium. So that was, Nico, well in excess of $12 billion worth of M&A deals going ahead this week and last week. So it's certainly never a dull moment in the iGaming industry. We also have a couple of bonus stories that I'm not going to go into too much detail because I'm exhausted from all these numbers now. But Game Lounge acquired a Dutch affiliate site called Meneer Casino last week. And there were rumours that PointsBet was subject to a 300 million Australian dollar Asian takeover that PointsBet flatly denied. What I would recommend to people listening, if you go to next.io, you can filter your content by category. So just under the top bar on the website, you'll see features, investment, regulation, betting, casino, all these different topics. If you go to next.io, click on investment. That's the most, that's the most M&A focused, big deals. All the super exciting moves in our industry are right there under the investment tab. So if you want to get all that information in one place, I'm just saying, I'm not trying to push it on you, but if you want the best information, you know where to get it. Go to next.io, click on investment, and you will find all the detail you are looking for. Nico, is there anything else we should discuss today? Any other bonus topics you want to throw in the ring?
Yeah, Sigma rumors. There are rumors. There are rumors flying around. So just let me touch down on some of the rumors actually facing the German market. There's a rumor flying around. There will be another fined entity by the German regulator GGL, which has a significant amount of red in their brand colors. So whoever came up with that rumor, not gonna happen. So you can look up which companies have a significant amount of red. Both start with a T. I'm pretty sure you will not see either or one of these companies being fined by GGL. Then another rumor flying around is that there is a tier 2 and a tier 3 operator for sale facing Germany. So one of these operators had been part or not part of the Snatex sale. You can look up this this entity, and the other one is also a tier 2 operator in Germany. So whoever came up with that rumor, it's true. there's a UK-based private equity company which is selling these two entities. And last but not least, there is a tier 3 operator in Germany which will shut down their business within the next 4 to 5 months. So this is also a rumor. We can't comment on this one. But one thing is for sure, rumors are rumors as long as there ain't any news distributed on Next.io, because we represent the spoken and readable truth.
That's right, Nico. Isn't it ironic? You have to go from Munich to Malta to find out what's happening in the German market. You have to go all the way across the Mediterranean just to see what's happening back in your home turf. But look, ladies and gents, you heard it here first. We're not going to give you any more information just yet until we can iron this one out and find all the best, most relevant information. But there you have it. Those are the rumors that are flying around. Nothing confirmed yet. Rest assured that we have a very dedicated team looking into this right now. So you heard it here first. Nico, I think that's pretty much all we have for this week. We managed to get everything covered in just under an hour. So I think we should be very proud of ourselves. I think that deserves a pina colada, don't you?
Yeah, exactly. And touching down on the pina colada topic, because one of the founding twos, the other half of the dynamic duo, Pierre Lind, is now moving from his flat to his Maltese castle. So everybody's welcome to join us and to help our friend out with moving boxes from A to B. And I'm pretty sure everybody will be gifted a pina colada, freshly made by Pierre Lind himself.
Not to be missed. An opportunity, certainly not to be missed, Nico. All right, that's all for this week, everybody. Thank you very much for tuning in, as always. Thanks to the audience. Thanks to our producer, Lorena, to Playson and Hub88, our sponsors. But Nico, last but never least, thank you very much to you. And I'll see you back here at the same time, in the same place next week.
So, Connor, once again, shout out to our listeners as well. And our weekly news wouldn't be the same if it wouldn't be you preparing each and everything. So once again, shout out to you. It is one of the highlights of my weeks, being able to, being accompanied by you, being led by you, and just distributing the latest and greatest news of our awesome industry to our listeners.
You're the best, Nico. Nobody does it like you. I'll see you next week. Bye.
Bye.